in the last week. I went more when they said a day or two ago on their Fed, and last night I did more.
Just Alibaba? Or are you talking JD, Baidu, PDB, the two Chinese ETFs? Everything China.
Hi stock investors, JJ here, welcome back. Well, this is a follow-up video about David Tepper talking about Alibaba and other Chinese stocks. He was very bullish in that previous episode. There's more today of what he said that I didn't put in that previous video, and a lot has happened. It did propel the market. I think him talking did help Wall Street to get in on Chinese stocks, and he has such a lot of influence. He's a so-called super investor. He's had an incredible track record, a star manager, fund manager, managing a lot of money, and you'll see how super bullish he was if you saw that past video. So let's see what he's got to say, and then we're going to compare it to what other investors have said. We've got Stanley Druckenmiller, who has a very different view. They are friends, they do talk as well, and also Tom Lee, who's popular on the internet on CNBC. A lot of people follow what he says, so what's he got to say about China as well, and we'll see what's happened in the market. So let's get into it.
Which I think is the biggest thing that people really have to go and understand it, because it has implications all over in bonds, currencies, and stocks. And we didn't talk about the currencies and bond side.
But just with the stocks themselves, I'm just thinking of your positions. Alibaba was a huge position. You really loaded up in the first quarter. You cut back, I think, in the second quarter. What are you doing now? Did the China moves over the last few days, but just because you were saying in the past you wouldn't go more than 10 or 12%, or the most recent things that we've seen are that you have about 12%.
He does have 12%. We've seen that. And if you've seen previous videos that I've made about this on the Art of Value channel about super investors' portfolios, he has about 12%, over 12%. Alibaba, he's had that, not just now. He's not buying it now. He did buy it earlier. And other stocks as well. JD, we'll have a look at those stocks in a minute, what he has actually owns and what's happened to them.
Does that mean you put those aside and you would own even more than that?
As I said, the value at risk model is what I sleep at night. I had a fine. I went over that limit on the Fed announcement, okay, in the last week. I went more when they said a day or two ago on their Fed, and last night I did more.
Just Alibaba, or are you talking JD, Baidu, PDB, the two Chinese ETFs? Everything China.
Everything. So that's the line that's gone around the internet, gone pretty viral actually, where he says basically buy everything. It's been condensed down to buy everything China, and that seems to be what's kind of happened. But he was going to say there that he sleeps well at night knowing that he's going to increase, and he might increase from 12%, which is already big for Alibaba. ETFs, there's a couple of ETFs we'll look at.
I would do futures, right? Everything. Listen, a long time ago, in 2010, I think I said everything.
And you
I remember when you said everything.
And you know what's good?
You were right.
Everything. Okay.
So he's been right for a long time in terms of being a great fund manager over time, coming out of the financial crisis, which was a long time ago, and now he's done very well.
So if they, this is incredible stuff for that place. Okay. So it's everything. Now I would love to see a pullback. Okay, because I will then, my newfound limit, which might have been twice my old found limit.
25%?
You said 10 to 12 is double.
20 to 24%. So
wow, that's a big call. He is sort of indicating there that he'd be willing to go to 20% on some of these stocks like Alibaba from 12 to 24.
I'm going to say what it is.
Is the limit 25?
I will have another newfound limit, okay, in a pullback, okay, if I see these absolutely be implemented. Because again, you can look at these names, and you're talking about single-digit PE multiples with double-digit growth.
But you think there's
and wait a second. Yeah. This is the other thing. You have some of these stocks with 50% cash. Some of these things you just put up on the board, 50% cash, 20% cash, 30% cash, and that cash, depending how the Chinese currency goes, maybe if the Chinese currency is really strong, they'll want them to buy back.
Okay, so David, let me ask you.
That other video that I made, the previous video, which I'll link to at the end of this and in the description, he goes through some of the details of what the Chinese government has said about stimulus, what they're doing, encouraging buybacks. He mentioned there companies with a lot of cash, that the government's kind of flipped on being sort of holding back these companies to really saying, well, okay, we want them to do well in the stock market, perhaps. That's what he's really saying here. If this is happening, if it's really true, if it continues, then there's a lot to go.
Did you see this thing? Buying back stock, when companies buy back their stock.
Right, but you're a hedge fund. How do you hedge your risk? What's the counter bet that you put on that, just in case?
You know what? I'm sitting here in a suit. My counter bet is that I don't care.
Back to China again. Just
He doesn't care, implying that he doesn't have a hedge at all there. Now, if you're watching this on YouTube or anywhere else with a like button, I really appreciate it if you hit that like button to help the algorithm to spread it to more people. Thanks. And do subscribe if you want to get more of this kind of content in the future. All right, so these are the stocks that David Tepper actually owns here, and he said be willing to go higher. And what's happened just over the past month, we can see here compared to the S&P 500, which is useful here. So the S&P 500 over the past month's only up 3%. We see Alibaba at the top there, 37% in the past month. It's had these rises before, it slipped back. Bearish people would say that this is going to slip back. We've also got PDD up 56%. Keeping in mind that he is with his fund invested in all these. JD 67% in the past month. Baidu up 30.96 and the S&P 500 up 3. As I said, if we go back year to date now to get a wider picture, because it has just been, look at that, in the past month or so, it's rocketed up. So the S&P 500's having a good year at 20%. Has been higher than that, but 20% is a very good year for the S&P 500. We've got Baidu actually still down for the year. JD up 63, PDD up 4.81, and Alibaba up 50.94. And now if we go to these ETFs that I mentioned here, we've got the FXI and the KWEB. We can see over 1 month it's up similarly, 32.69 and 46% for those two ETFs. Now I'm going to react to this short discussion here. They mentioned Stanley Druckenmiller and what he's been saying recently in relation to David Tepper. Quite two different types of investors, but both legendary, both have had an amazing track record.
Stocks continue to move higher today. Hang Seng posting its best day since November of 22. Weiss, you see these comments from Stan Druckenmiller? He was apparently at a conference where he was quoted as saying that he has, quote, no interest, quote, as long as Xi Jinping is running that country. It just goes to why some, I think including you for a pretty long time, have said it's uninvestable. You don't trust it.
Right.
Whereas Renaissance Macro's Jeff DeGraff says he's very bullish. If you never listen to another thing we say, listen to number one. Number one was buy China. Right. What are we supposed to do, man?
So we've got three views coming from different places. So Tepper came out. Dave is, he's bullish on the trade, I'd say, because of stimulus. I wouldn't expect him to be there on a long-term basis. Druckenmiller, he tends to be, I think, a little longer term with equities, particularly now that he doesn't have his hedge fund publicly. So
Druckenmiller's got a family office now. He's not running like a public hedge fund here, but he does talk quite a lot in the media. He does interviews. He's been very keen on NVIDIA. He's not afraid to ride these stocks up. He does talk about the macro and trends, not just fundamental investor, although he does look at fundamentals as well. So two very different investors. Now this guy's saying that Tepper's might not be in it for the long term. I have seen a suggestion in comments that David Tepper's trying to drive the price up so he can get an exit. Back then he said he'd be happy to double down on those. It's hard to see how he would play with his public reputation there about talking stocks up and then selling them immediately, and people would see that in their filings coming up if he'd had done that.
So I think he's right from a longer term basis. Intermediate term, it's not investable. Not investable doesn't mean it's tradable. If you go to DeGraff, who I worked with at a prior shop, he's purely technical, and right now, and Joe will tell you this, momentum looks good. So you've got three different ways of coming at the same, at the same trade, and they all make sense given what their perspective is.
I know, but what I find interesting, though, is, as far you know better than me, Tepper and Druckenmiller are, they see a lot of things the same way.
And they're friends, they're good friends.
They respect each other's investing strategy.
Absolutely.
Arguably more than any other. They're like, I mean, they've talked about the way that they invest over the years. I find it interesting that Tepper comes on and says, buy everything. I'm paraphrasing a little bit, whereas Druckenmiller's like, I'm not touching it. I can only imagine the conversation that they might have had between the two of them, over the last week or so.
Right, but I can tell you Dave's cost, I'm just looking at Baba, is a lot lower than where it is now.
I know, but you know what I mean.
So Dave's buy everything is conditioned on price. And
that's true, but he did say explicitly there that it's still low. In the other video I made there, he talked about how even though it's gone up a lot, when he was talking it had gone up, that it's still, if you go back 5 years, it looks very much like a flat line, even with the recent 52-week highs.
Obviously.
And you mentioned when he made the comment, he could be out at any time. And with having this kind of gain in such a short period of time, Dave's the kind of guy that maybe I don't want to wait. And I don't know. I've spoken to him recently, but not about this. So I'm not out of school here. But you don't know. You don't know. So the point is, stock's up, in no time.
Right.
From
a lot. Look,
from
KWEB's a 52-week high.
Yeah.
FXI is a 52-week high. No surprise, because they've been like the other day was the best day for China stocks.
And Stan was being asked the question after this move. Don't forget.
Yeah.
He has been asked the question after this move, and he said he'd be willing to do more. Okay, let's see what the popular Tom Lee has to say about this too. He's making comments after David Tepper made his, after these big moves. What's he got to say on China? He's usually pretty positive, pretty bullish.
It's worried about the inflation side of it.
Did you see Tepper talking about China? Would you ever
subscribe to that theory?
Buy a lot in China?
Yeah, I mean, I'd say that not only did China launch a bazooka, but it's really working, right? Because the stock market has really broken out. I think China is now the best performing stock market this year.
But was the move made? I mean, I think we had Kyle Bass on yesterday, and I think he would argue long term, no matter how you want to think about China, it's a bad bet. He was suggesting maybe in the short term, it's a good bet, and I don't think he was necessarily opining on whether the bet is over. But the move, obviously, the big move has happened. The question is, do you see that doubling? Is that in the cards at this point of the game?
Yeah, I mean, something to keep in people's back of their mind. Over the last 10 years, China has underperformed the U.S. by 7,700 basis points. So if China doubles, it's still underperformed by like 5,000 basis points. So, I mean, there's a lot of room for a rally, even if it looks corrective.
So Tom Lee basically agrees there. He thinks the China market's got a lot of room to run if the stimulus takes hold. He has said more about this in other places too. He basically agrees, thinks it could be a good trade, or more than a trade really, as an investment. I think David Tepper's thinking about longer term than a quick trade as well. So let me know in the comments, what do you think about this? Do you agree with David Tepper? And also, Tom Lee agrees there, or do you agree with Stanley Druckenmiller? A lot of people don't want to touch China no matter what. They just don't trust it. Stan Druckenmiller tends to think like that. And Warren Buffett doesn't really like China. Charlie Munger did, and he was invested in Alibaba, which didn't go so well. By the time that he died, seems to be improving now. He didn't live long enough to see that play out. But what do you think? Let me know in the comments. Now I'm going to put a link on screen to that previous episode that I mentioned here with David Tepper talking about Alibaba and China stocks. Thanks for watching or listening to this, and I'll see you in the next one.